It is still unclear what will happen to the British financial industry after Brexit. Meanwhile, banks are creating facts and relocating jobs to the EU. But what does that mean for London as a financial centre? The relief was great when the UK and the EU reached an agreement shortly before the turn of the year. The main thing was not an unregulated hard Brexit, and that was good according to the popular opinion. But the agreement does little to help the British financial sector, as it is largely left out. From the point of view of the British financial sector, we are dealing with a no-deal scenario, says Jürgen Mattes, head of the International Economic Research and Business Cycle at the Employer-Related Institute of German Economy. Because for the British financial sector, leaving the EU internal market means Great Britain is treated like a third country. For example, employees of British banks are only allowed to serve customers from from branches within the EU. Even telephone consultants and the consultations for that are forbidden for financial service providers, says Mattes. This is a consulting service that British financial service providers are no longer allowed to offer from Great Britain. Nevertheless, the disruption have so far been limited. There have not been any major disruptions with regard to financial stability, says Andreas Krautscheit, General Manager of the Association of German Banks, that's the BDB. In areas relevant to stability, such as the use of British clearinghouses, the European Commission initially left market access through equivalence decisions open. The banks have taken appropriate precautions in all other areas, says Krautscheit. German banks were also well prepared for the classification of Great Britain as a third country. Nevertheless, with a view to international competition, it's still desirable that the EU also makes market access possible for other areas, he says. In numerous equivalence regulations, the EU now wants to decide whether to recognize the British regulation in the financial sector as equivalent to EU regulation. Many of these decisions are still pending. Because there's one problem for Great Britain. The EU can unilaterally cancel these equivalence regulations at any time, which makes it difficult to plan. For Mattes, it's clear, banks can only do significant business in Europe if they have a branch on the continent or in Ireland. Many banks would therefore have to relocate their business base. This means that jobs are being lost in London and are being built up in Paris, Dublin, Amsterdam and Frankfurt, says Mattes. In some areas it can be observed that businesses are migrating, says Krautscheit. This applies to the relocation of business to the EU, which can be observed in particular with international banks. Up until now they had managed their business via London and now handled it via Paris, Amsterdam or Frankfurt, for example. But you can also see that business from London is going to other regions of the world, such as in derivatives trading, where New York is particular in benefit from more orders, says Krautscheit. The consulting firm EY assumed in October of last year, before Great Britain left the internal market, that 7,500 jobs within the financial sector had already migrated from London to the EU. In addition, according to EY, assets totaling 1.2 trillion British pounds have migrated to the EU. Although the situation was predicted and some jobs have already migrated, there's now another potentially even greater surge in migration, says Mattes, and Frankfurt as a financial metropolis will certainly benefit from this too. The German Federal Ministry of Finance also comes to this conclusion. A total of 55 British banks and financial service providers have applied for business licenses in Germany, the ministry said in a response to a small question. 54 of these have so far been approved. In addition, 3 property and casualty insurers obtained permission to operate. In the wake of Brexit in Germany and other EU countries, numerous financial service providers from Great Britain either set up new branches and subsidiaries or expanded existing structures to some extent, it is said. Alongside Ireland, Germany has proven to be an attractive location. The Federal Ministry of Finance assumes that the relocation of assets and the newly created jobs in the financial sector will have positive effects on the attractiveness of Germany as a financial location. The Hessian Landesbank also assumed this in a weekly report. Frankfurt can expect around 1,500 new jobs at the Brexit banks by the end of 2022. Krautscheid also assumes that jobs will be created. That won't be tens of thousands of new jobs, as has been assumed for the Frankfurt area, but the importance of Germany as a financial location is increasing, he says. For London, time is of the essence in view of the unresolved situation. The longer the decision on the equivalence agreements drags on, the more jobs will migrate and the smaller the chance of bringing jobs back to London with an equivalence agreement, says Mattis. This also means that the UK's incentive to adhere to EU rules in the financial sector is decreasing. Great Britain has always emphasized that it did not want to deviate from international financial standards, says Krautscheid. Nevertheless, the British government will work to keep the UK as a financial location attractive. It has already announced that it will no longer implement EU laws or change the previous legal framework for individual financial areas, he says. For example, the British government is considering lowering the minimum requirements for IPOs. The aim is to attract foreign companies to the London Stock Exchange. Because this too has lost its attractiveness as a result of Brexit, market participants from the EU are now only allowed to trade shares in European companies within the EU. And this has consequences. According to the Financial Times, on the first day of trading in 2021, around 6 billion euros of EU equity trading migrated from London to EU cities. However, it remains in the mutual interest that the EU and the UK maintain equivalent standards in order to expand mutual market access, above all to avoid the migration of business to other regions of the world, says Krautscheid. The financial industry is central to the UK economy and especially to the capital London. In 2018, the financial service sector contributed £132 billion to the UK economy, around 7% of total economic output. So is Brexit the end of London as a financial centre? London is one of the largest financial centres in the world and it will remain competitive in the future, says Krautscheid. The business that is now no longer going to break the neck of London as a financial centre, says Mattis with certainty. The location is too strong for this and is doing enough business outside of Europe, for example in Asia and America. One will have to wait and see how well this can be expanded. But even if the consequences of Brexit are only partially compensated for, London will remain a financial centre, says Mattis. It's just too big and too relevant. And if you want to stay informed, please subscribe to my channel and my other channels. I'll see you in my next video. Auf Wiedersehen.